I'm Daniela Cambone for Kitco News, and you are watching In the Lead for the week of April 4th. Good morning, Jon.
Good morning, how are you?
Jon, we started off this week with crude opening at a 2-year high and silver hitting a 31-year high. Your thoughts?
Yes, we've seen this morning that oil has proven once again to be a great lubricant for the entire commodities complex. Naturally, a spike in oil to above $108 has prompted many a speculative fund to pile on heavily in gold and in silver, of course, and silver tends to outperform gold intraday as well as on larger time frames. So what we've seen in silver is purely a reflection of the speculative attention that hedge funds and commodity players are paying in this niche at the moment. And it's reached near that 38.50 level. It is, in the minds of many, quite richly priced and perhaps a very crowded trade. So we have to be careful with a 75-cent or 2% move coming on the heels of specifically a gain in oil. How much of this is real safe haven bid versus simple aggressive speculation. I'm generally a bit cautious on silver when I see moves of this magnitude.
Another big news item this morning, Jon, is regarding the IMF and how they may use the profits from gold to help developing nations. In fact, there's a critical meeting taking place on Wednesday where they'll decide what to do with the profits raised from disposing of just over 400 metric tons of gold. Any thoughts?
Well, it's simply a pickup of the previous statements that the IMF has made over the last 2 years. We've obviously noted that they mobilized some 400 plus tons of their vast amounts of gold reserves and did so with the intent, in fact, of helping underprivileged nations come to grips with economic conditions. And we have seen several nations in the Middle East, North Africa region actually undergo social upheavals recently, in fact, and in part due to dire economic conditions. So, gold and the IMF is really a topic that's been on pretty much everyone's minds for the last 2 or 3 years. The more interesting question to ask here is what will happen going forward with some portion of the remaining gold that the IMF holds, and will such gold tonnage potentially be mobilized with the same aims of helping poor nations, or perhaps for other reasons, simply because the price is so elevated and the IMF feels that it needs additional funding to manage its own budget. Part of the sales happened specifically because the IMF had budgetary issues and needed to make ends meet. So it was a dual purpose to begin with, but I think we'll need to watch statements coming out of the IMF fairly closely this week to see what the attitude it has towards the remaining reserves in gold.
Jon, you alluded to this in your Monday commentary about the series of tensions in Yemen, Syria, the Ivory Coast, Nigeria. Are these places that could have an impact on gold production?
Well, up to this point, they haven't been. They have been really regions where oil production is of paramount importance. And although Libya is not a giant producer of oil, it certainly has put the oil trade and the oil speculation on fire. We've seen that for the past several weeks. Nigeria and the elections surrounding its political process are now pretty much on the front and center of trading folks this week, because Nigeria is in fact Africa's largest oil producer. Ivory Coast, violence is also playing into the oil market this morning. But as far as gold production is concerned, I think the further south you go on the continent, the more important gold and platinum group metals production becomes.
Okay, staying on the continent of Africa with news items, Sudan's president announcing that gold exports from the country may double to 3 billion from 1.4 billion. Is this number significant?
It's a nice announcement, certainly, but 3 billion at the end of the day is not a huge number in terms of value or tonnage in the gold market. What's more relevant about the Sudanese announcement is the fact that it's following the trend of almost every gold-producing nation, and that is that with current margins and a cash cost production of gold roughly at just under $600 per ounce, and the current value is well over $1,400. It's compelling to try to ratchet up your production as much as possible, no matter who you are, large producer or small. And that's exactly the trend we're seeing unfolding at the moment.
Finally, John, a World Gold Council report came out last week that focused on India, and a finding I thought was interesting was that Indian households hold more than 18,000 tons of gold. Are you surprised by this finding?
Not really surprised. I think it underscores the fact that Indian culture is intrinsically tied to gold, and that gold plays a significant role in the cultural life of India in terms of weddings and festivals and so on. So over the period of years and years and years, Indian households have definitely accumulated something of a gold hoard that is tremendous in size. It actually comes to more than half of what the world's central banks hold. So if you look at a group that holds that much, one has to ask the question, is there some price point, is there some crisis point at which some part of those holdings might be let go of? We've seen, of course, in the last 2 years that high prices alone brought about a significant unloading of scrap gold from Indian households, obviously because cash needs were pretty pressing. I might add too that the above ground gold in India, this 18,000-ton hoard, is about equal in size, in fact just slightly smaller than what is estimated to be underground in India. Some 20,000 tons of gold in that country's subsoil remains unmined and could potentially come to market to fulfill domestic needs and perhaps export.
Okay, good, John. Is there anything else you'd like to add for this segment?
Yes, I'd like to encourage our viewers to go to their trusty iPad Kitco application. Please consult your KCAS Gold Live application as frequently as possible to check the latest news and price developments in the market as provided by Kitco's innovative team in the IT department.
John, thank you so much. We'll see you again next Monday.
Until then.